today's World Insight, a U.S. ban on TikTok in the works. Another Chinese company caught between a rock and a hard place. The repercussions from industry insiders. And a Chinese fintech giant set sights on a public listing in Shanghai and Hong Kong. Why not New York? Is it part of a bandwagon? Here is our host, Tian Wei.
Hello and welcome to World Insight. I'm Tian Wei in Beijing. We begin with the U.S. ban on Chinese short video app TikTok. The U.S. House of Representatives on Monday voted to bar federal employees from downloading the app on government-issued devices, again citing concerns over national security. TikTok is a free app, something like a short-form version of YouTube. With a mix of viral dance crazes and comedy sketches, TikTok has become a phenomenon among young people. Now it's under investigation, though, for allegedly collecting user information. What will happen to those influencers on TikTok as relations between China and the United States continue to sour? Who will be the next target? And for more on U.S. ban on TikTok, in Nanjing, we have Jay Huang, founding partner of J Stone Venture and former managing director of Intel China. In Washington, D.C., Ernest McDuffie, founder of the Global McDuffie Group. Welcome to both of you, gentlemen. Certainly, the latest news about the TikTok grabs a lot of attention, especially, I guess, for the influencers on TikTok. But seriously speaking, what do you make, Mr. McDuffie, of the decision?
Well, like so many of the recent decisions out of the current administration, it really seems to lack a lot of credibility to me. I don't think there's a real valid reason for having such a ban.
There are a lot of politics behind it. There are also somewhat business competitions as a result. It's been very interesting that I can read from TikTok's perspective. President of the head of U.S. public policy with TikTok suggesting that TikTok app is not available in China and not owned or controlled by any government. The company is led by an American CEO with hundreds of employees and key leaders across safety, security, product, and public policy based here in the United States. What's likely to be the implication, Mr. Huang, if the United States, which is considered as one of the leading economies and a leader in setting the rules doing that, would others also follow suit, whether in emerging economies or developed economies, accusations against foreign companies without providing evidence?
It's really unfortunate. It's not good for consumers. It's not good for actually competition.
Having said that, though, what does that mean for TikTok to survive? How could they look at the situation if you are consulted, if they ask for your advice? What can they do, Mr. Huang?
First, they can say I'm spin-off on the TikTok from the parent company ByteDance. And then that means I move all my servers and outside China and the development and work and will move outside China as well. They also create opportunities for other companies, for example, like some European companies.
Mr. McDuffie, how do you see social platforms collecting private information, that both as an overall practice by all companies, and how do you think individual companies are unique from one another?
And really, the only thing you can do as a consumer is, make sure all your security, privacy settings are set the way you want them, or not engage with them at all. I might be showing my age a little bit, but I find all social media platforms to be pretty much time waste. You're not really doing any kind of important work or significant work. I spend a lot of time on the computer, doing real work. And to waste time, doing the social media stuff just seems ridiculous to me.
People spend a lot of time on social media, all kinds of social media applications, and a significant amount of time. And so there's a lot of information and actually get stored or acquired by the application providers, such as who are our friends, which are our preference, and what we would like to buy, what are our political view, etc., etc. Those information, AI algorithm can pretty much knows who we are, what we want to do, and they can select the information we like, and then customize those information feed. So lots of information get exchanged and stored or acquired legally or illegally by the application providers.
When are we going to have some rules commonly recognized and practiced? Without that, can we just ban each other?
I think there's definitely a need for international regulation and rules. It seems that the European Union is probably in the lead right now in terms of trying to put some kind of a regulation and rules out there. But we have to remember that technology is always ahead of the bureaucracy of politics and what kind of regulations you have. It's going to be necessary, I think, to regulate them. It's going to be necessary, I think, to put some kind of clamp on how big they can become. The whole idea of monopolies in the United States has been something that we've kind of fought against because it stifles competition, it stifles innovation and all of that. We really need to break. I think Facebook is too big, Google's too big. All of these platforms are already too big and are getting bigger.
And now without further competition, let's just say from TikTok, the bigger ones are going to get ever bigger. And as a result of that, there will be less discussion about what the rules could be and how can we be competitive under the rules. Isn't it, Mr. Huang?
Without competition, and then we can see the monopoly and then become even worse. And it's going to kill all the competitions and, and all the bad things. I think of TikTok, and because they want to survive, so they are made it very clear they have intention to spin off from parent company ByteDance. I think this creates opportunities, and even for some European companies, they may acquire independent TikTok, for example. That is going to be very helpful for the global competition because so far we see the internet applications are primarily coming from two countries, United States and China. And with a spin-off of TikTok, and then European countries or companies may be able to participate into this global competition. I think that's very healthy for the overall landscape.
Another thing is about TikTok or Facebook or Twitter. They are platforms. At the same time, they are nurture ground also for entrepreneurs. Some of the influencers certainly are making their big fortune on these platforms while at the same time serving the public, entertainment or other things. How do we see also try to protect these kind of platforms as nurturing ground for entrepreneurs?
It's a difficult call to make. I haven't seen any good proposals that even move in that direction because the people in control that have power over those platforms really aren't that interested in innovation, and they're interested in maintaining their control. So they're not really incentivized to open it up and make it as wide open as it can be. I think one of the best examples on the internet of something that's really an open platform is open source software that allows people to actually participate in the development of new tools, and you have to have a lot of transparency involved and a community behind it that supports that. If you could have that kind of thing in a Twitter or a Facebook platform, that would be good.
If you look at it from a free competition point of view, the TikTok success in the United States is a really good thing for anti-monopoly. A really good thing for the free competition, and good things for consumers. as we all know, without TikTok, and then the U.S. and the internet company, it pretty much have their installed base. Now suddenly we have an international company coming in. It's a really good thing. Unfortunately, it got hammered by this geopolitics, which is really unfortunate.
Looking ahead, Mr. Huang, what kinds of map are we thinking about right now with geopolitics? What does it mean for internet-based companies? We were told earlier, many years ago, that internet will provide a platform for everyone to compete and to enjoy and also to interact. Obviously, geopolitics seems to be much more in front of us rather than a free ground of exploring the possibilities through the internet. So, Mr. Huang, what kind of picture are we looking at?
To overcome that, the company have to think about whether I'm going to create and spin off or create an independent company going to the United States or going to China or going to India, for example. And if every country follow the rule or follow the rule by law, and then it's a kind of a workaround. And then, and overall, if we're running into one world, two systems, that is not good for everyone.
Do we have the danger of one world, two systems, Mr. McDuffie?
Yeah, for sure. There's the haves and the have-nots. The policies around the internet might be open and accessible to everyone, but the infrastructure certainly prohibits. If you don't have access to broadband, high-speed internet, a lot of these applications won't run for you at all. More and more of a separation between first world countries and third world countries and people of means in the first world, right, versus everyone else. It seems
that both of you are talking about different things. Mr. Huang is more talking about geopolitics having its impact on the quote-unquote one world, two systems. And Mr. McDuffie, you are talking about the wealth gap actually existing in our world, and that is dividing the world into one world, two systems, the have and the have-not. How do you think all of this eventually mixed up, entangled, actually going to have an impact on how much prospect we could have with the internet can provide? Mr. Huang.
This one world, two systems and separate out by geopolitics is really a danger and to the global and to everyone in this world. I think we should every country and company should do our best to try to prevent such a thing from happening, because it does not benefit anybody at all. Each country and each company is the best technology and competing in a level and a playground. I think that should be the right recipe for everyone.
Is that going to happen, really? Mr. Huang, given your knowledge of the reality, or is it wishful thinking coming from a tech nerd?
It's difficult, and maybe I'm too optimistic and to think about that thing. It looks like we are maybe headed into one world and two systems. I think the last thing to do with China. If China continue to open its doors and continue to allow the international company coming to China, and also continue to provide the world with open trust, and then our best technology, whether on the technology side, on the product side, the manufacturing side, etc. I think we might be able to, if not prevent, at least slow down this trend of one world, two systems.
Okay, Mr. McDuffie, geopolitics-wise, what do you think? What Mr. Huang just said?
Yeah, I think he's right. It would be a wonderful thing. I think I share a lot of his views, particularly the optimism. It would be a wonderful thing if the geopolitics recognized how damaging the two systems could be globally. And actually, it's the same kind of damage that we're seeing from the haves and have-nots from the economic standpoint. So if the geopolitics got together and decided to address the wealth difference globally and tried to raise the minimum level for prosperity across the board, that would go a long way to easing tensions or opening up borders. It's one planet. It's a fact. It's one planet. You can't, and as technology and everything else continues to advance, the planet becomes smaller and resources become more and more precious. And if the geopolitics don't recognize that and try to deal with it in an open and transparent way that benefits everyone, the world can't survive like that.
Some say, Mr. McDuffie, I do not want to put you into a strange spot, but the U.S. has lost its style, its manner as a leader of the world. Do you agree with that? In a way, how do you look at, from that perspective, the TikTok story and other stories about whether foreign companies could still compete on a fair ground inside the United States?
The last 3.5 years have been disastrous for the United States' reputation globally. My only hope is that in a couple of months we start to reverse that trend, that we get some some adult leadership back at the helm of the United States, and that we can actually re-engage with the rest of the world for good. It doesn't do anyone any good to build walls and to retreat into isolationism. I mean, that was the cause of the last 2 world wars. We have to turn away from that. We have to turn toward the science, toward the technology, to look for these solutions that are bigger than any one company. One company, one country.
The United States is already closing its door. The United States is also already kicking foreign companies, particularly Chinese companies, out of its door. The United States is already demonstrating that unilateralism probably was the way to go. Should China still follow an open door policy? Should China still try to open even more than it used to be about different technology possibilities, about entrepreneurship, about international cooperation? There's debate here in this country, Mr. Huang.
I think the answer is China should and also must, and then keep and open its doors. And if you look back the history, China developed and much faster, improved people's and welfare and also people's life dramatically after China opened its doors and after Deng Xiaoping take on power. So that is a story to tell everybody, keep open door policy can help China, also help the world. And actually, you look at since China joined the WTO in 2001,
yes.
I think that the world landscape and the change, it benefited globally. I think it's not just benefiting China, it's benefit globally. Of course, and then not everybody and in each countries and take an equal share of this benefit. Some people may take more, some people are less. But globally, this is good for every country.
We'll see how different parties involved are going to tangle with one another, and we'll see how TikTok would find its way. Interesting discussion with both of you. Thank you so much for joining us, Jay Huang and Mr. McDuffie. Really appreciate it. Thank you. You're watching World Insight. Coming up on our program, a Chinese fintech giant sets sights on a public listing in Shanghai and Hong Kong, the dual listing. Why not New York, some ask? Is it part of a bandwagon? The answers after this. Welcome back. This is World Insight. I'm Tian Wei. Next, we take a look at the new movers and shakers of share markets in Shanghai, Hong Kong, and New York. China's Ant Group says it seeks to dual list in Shanghai and Hong Kong. Alibaba's fintech arm is seeking a valuation of more than $200 billion Ant Group is the parent company of China's most popular mobile payment platform, Alipay. It's now the world's highest valued fintech company, bigger than WeChat Pay and Apple Pay. It now offers a variety of online financial services for consumers, including payments, banking, brokerages, and wealth management. So, what's behind its decision to list in Shanghai and Hong Kong rather than New York? Some say there are obvious reasons. Others say there are more than just the obvious. Let's loop in our panelists. For more observation of the Asian stocks in Hong Kong, we have Hong Hao, Managing Director and Head of Research at Broadcom International. In New York, Anthony Chen, former J.P. Morgan Chase Chief Economist. Gentlemen, welcome to the program.
Thank you.
Thank you, sir. Follow the money. That's what they say always, no matter what the weather is like. So tell me, where shall we follow the money? Here on the mainland in Hong Kong, or go to the U.S. Stock markets and get listed? Mr. Hong.
Yeah, well, I guess the fun is coming this way. So far this year, Hong Kong's IPO market has been going banana. And because of that, money is chasing some of the very hot IPOs, and we're seeing very large fund flows going into Hong Kong. So as a result, Hong Kong dollar strengthens substantially as well, and I think the HKMA has to intervene. And I think the reason being the rivalry between U.S. and China is escalating. So it actually makes more sense to get listed in Hong Kong, and more increasingly you will see many U.S.-listed Chinese companies coming back this way as well.
Interesting. Mr. Chen, based in New York, would you agree with your Chinese colleague, Hong Kong is the way to go?
Well, I think that right now the risk-averse position or strategy for many Chinese companies is certainly to list in Hong Kong in the event that they'll have problems in the United States. But if we want to follow the money, any investor can invest in a Chinese company, whether they're listed in the United States or listed in Hong Kong. There's really not that much of a constraint. So if there is a good company out there in Hong Kong or in the U.S., U.S. investors certainly will follow the money and buy it, irrespective of which exchange the company is listed in.
Okay, if we look at, in contrast, the numbers of IPOs and amount raised in other regions, for example, in the Americas, but this is as a whole, the listings and proceeds each fell 30%. Meanwhile, the number of listings in Europe fell 47%, where proceeds down 48%. I'm not trying to say there's only one flower in the world, that is Asia, that is China. I'm just saying the number is showing interesting things, isn't it, Mr. Chen?
It certainly is. And one of the reasons, obviously, is that the pandemic has hit the United States a lot deeper. We've had almost 3.8 million cases. The country has been shut down. When you go to Asia, you see that the hit has not been as severe. And in fact, by the end of the year, Chinese real GDP will be higher, growing somewhere in excess of 2%, maybe as much as 2.5%, while in the United States, the economy will contract overall for the year by close to 5%. So there's clearly stronger economic activity in Asia, and certainly that is being reflected in the equity markets.
I don't know about you, Mr. Hong, but I can hear from your colleague, Mr. Chen, suggesting don't be happy too early. It seems that even though the number looks great, but long term, is the economy really supporting those numbers? And maybe the stock markets are just moody.
Well, the market is always moody. As you can see, the dramatic rebound from March low. Nothing like this has ever happened before. I think, in terms of money raised in Hong Kong and also in the Asia market, Hong Kong has always been number 1 or 2 in the IPO league table. So also with the return of many of the Chinese companies, it's actually not surprising at all. Regarding the mainland market, though, a year ago today, we have this new tech board that is having a listing reform, which now the listing on this board is based on registration phase. So as long as you can fit the listing criteria, you're good quality companies, you can get listed in this new tech board. Then I think since then, many of the high-tech Chinese firms and healthcare firms are listed on this board and has been a tremendous success stories.
Right.
So yeah, so I would say that I'm not surprised by the money raised.
If you take a look at companies, particularly Ant Financial, that is the one likely to be listed very soon, both in Shanghai and also in Hong Kong. And CEO Eric Jing stressed the benefits of an initial public offerings with the choices like this. He said, becoming a public company will enhance transparency to our stakeholders, including customers, business partners, employees, shareholders, and regulators. Through our service to serve the underserved, we will make possible for the whole of our society to share our growth. Of course, these are the bigger goals a company set for itself. But looking at Mr. Hong, what is Ant Financial? Behind its Alibaba and its competitor also we see WeChat Pay. Meanwhile, overseas there's Apple Pay and PayPal, things like that. So how do you see Ant Financial as a leading company in that field trying to choose these two places, Shanghai, Hong Kong?
Yeah, well, Ant Financial has grown substantially. I think last time when it was evaluated by private investment groups back in 2018, it was valued about 120 billion US dollars. Now, I think many is putting the valuation of this deal at about 200 billion, right? So it's a very substantial amount, and I think it will be ranked one of the largest IPOs ever, especially in Asia. So I think over the years, the Ant Financial has grown into a payment company, a financial service firms, and also has a very large cash fund management under it as well.
Mr. Chan, a huge amount of money behind this IPO, Ant Financial, a leading flagship, shall I say, in the field too. How do you see the international competition? The map of it as a result of Ant Financial being listed in Shanghai and Hong Kong?
Well, I think there is going to be global competition, but Ant Financial is a solid company. I think they're going to expand even out of China into other Asian economies. It is definitely a company that one should watch and certainly be very excited with their progress, because the world is moving towards fintech solutions and more electronic solutions. Certainly this COVID-19 pandemic is going to cause people to be even more excited about using electronic payments than they are using currency. Of course, in China, electronic payments is something that is more common than it is in the United States, but the United States is going to catch up.
Right. Another thing about the latest development is what does that mean for Chinese companies? Earlier, both of you touched on a little bit about that, but analysts has been suggesting that more U.S.-listed Chinese companies are actually right now flocking back to Hong Kong or the mainland in China as U.S.-China tensions rise. Last month, for example, Chinese gaming giant NetEase launched its listing in Hong Kong, raising $2.7 billion US. You've also seen some of the other companies doing similar things. So do you think that will be the way to go? Just following earlier, we have a discussion about the tech world. Are we going to see, once again, in the financial world, one world, two systems, namely listing in the U.S. or listing back in China? Two very different surviving trends. Mr. Hong.
I would say that back then the Chinese firms chose to go overseas is because when you get listed in the U.S. stock exchange, it has this sort of a premium image attached to it, right? So it has a very nice premium cachet attached to it. I think now, and also back then, because of the listing rules, it's an approval-based system, right? So you have to queue up, and there are like hundreds of firms in front of you, and whether you get listed in China or not, it really depends on how early or how late you get into the queue, which is hugely unfair for many of the firms that is looking for capital for expansion. So I would say that now the listing reform, so now the China export also is reforming to be a registration-based system as well, same as the new tech board we mentioned just now. So I wouldn't be surprised to see more and more Chinese companies coming back this way. And also, regarding Hong Kong, if you still remember a couple of years ago when Alibaba was choosing between Hong Kong and New York, right? It didn't choose Hong Kong because there was the ownership issue. So same stock, you have the same ownership. The Hong Kong Stock Exchange insisted that. And then later on last year, I think Hong Kong Stock Exchange reformed their rule as well. So as a result, naturally you see more and more companies coming back this way.
Mr. Chen, are we going to see Chinese headquartered company coming back to the Chinese stock market and also in Hong Kong? Is that going to be also one world, two systems? We're talking about the trend.
I really hope not, because we're in a global world and we have to cooperate. But right now, let's just face the reality, and that is that U.S. regulators are requesting that Chinese companies provide more financial data. And of course, companies in China sometimes are not permitted to provide the same level of accounting information that U.S. companies provide in the United States. And so I think until regulators really get together and form some sort of a compromise, that Chinese companies will gravitate towards Hong Kong. But someday, I am confident that regulators in China will allow Chinese companies to provide more information, and you'll allow more companies to list back in the United States. And my dream is that someday even U.S. companies will want to list in China, and some Chinese companies want to list here. We're one world. There's no need to really separate things like that. But I agree that right now the tensions, whether it's on the regulatory front or on the trade front, are pushing us in that direction. But I hope that someday that won't be the case.
I've been talking to some of the people in the know regarding China-U.S. relations, gentlemen, over the past few weeks, and people are suggesting before the U.S. general election, the atmosphere is too toxic to nail the details for the positive direction. But after 4 months, are we going to see any change? That's probably companies have to think about.
Anti-China sentiment is sort of bipartisan. So whoever, as we go into the U.S. election, the rhetoric and the rhetorics that is being used by some of the U.S. politicians could get even more heated than before.
Right.
As we have witnessed just now, recently. So I would say that it's very difficult to predict, and I think for Chinese companies to get listed in the U.S., they have to prepare for this contingency.
Mr. Chen?
I'm actually more optimistic, because I feel that right now, if you look at Mr. President Trump, his base wants him to be very tough with China. So the rhetoric and perhaps even some of the actions will be aggressive. But if he wins the election, then there's no need because there's not going to be a future campaign. If he loses the election and Biden becomes president, he has a history of over 30 years of compromising, either with other political parties like Republicans, or in fact compromising and meeting other countries halfway, whether it be Europe, whether it be China. He does have a history of a compromising demeanor. So I think irrespective of who wins the election, whether it's Trump or Biden, I think that the environment for the U.S. and China tensions will be a lot more positive than they are right now leading up into the elections, when to some extent both candidates have to act as though they're very tough on China for political purposes after the election or immediately after. Some of that pressure will go away.
So what about in the near future, also for these companies, when they are being listed, like just say Chinese companies coming back to China from New York, Shanghai, Hong Kong, how attractive will these exchanges be, these markets be in the future when we see a geopolitical divide? Mr. Hong.
Yeah, I would say that, investors as well as listed companies are preparing for this sort of contingency, because it's very unpredictable. Therefore, you don't want to wake up one day and find yourself in a situation. So I think, for future purpose, as you can see, the Chinese capital market is undergoing substantial reform. The trading volume on the Chinese stock exchange now is, well over 1 trillion yuan per day, right? So it's a very liquid and a very well participated market. In terms of Hong Kong, so if you put the mainland Asia market and the Hong Kong stock market together, together they are like very close to the largest in the world. And also Hong Kong still has a very sort of a good solid financial system for listed company here as well. So I think all in all, I would say that even though the U.S. market is still the largest, but I would say that the Asian markets, especially the Asia and the Hong Kong shares market, competitive.
Mr. Chan, of course there are political issues about Hong Kong, whether different sides agrees or not about the latest policy. But China has always said it's an internal issue, not have the interference of the others. Let's just put politics aside. So now, how attractive is the Hong Kong market for investors around the world?
I think that right now the Hong Kong market is very attractive because when you look at Hong Kong shares, the Hang Seng Index on a year-to-date basis is actually down. When you look at other markets like the Shanghai Equity Market Index, that index is much more favorable in terms of its being much higher. The Hong Kong economy will in fact be a little bit weaker, so there's an opportunity for a recovery in the Hong Kong equity market. And by the way, I would say the same thing about the European equity market, because that market is certainly on a year-to-date basis a little bit softer. So when I see equity markets that are down and I look to the future and I think things may be improving, that gives me some hope.
I see.
And it makes me feel there's value there.
On the other hand, both of you gentlemen, what about stock markets inside the United States, New York Stock Exchange and NASDAQ? Of course, Mr. Chen, you're in New York. You know that as a result of the pandemic, the stock market pretty much hit by that, even though the markets are doing quite well if you look at the investors' income. So how do you see this quite mixed signal? What's likely to be the near future for markets inside the United States?
I think the markets in the United States will do just fine. I mean, you can see that the S&P 500 is up from the lows in March 23rd. It's up over 45%. So it clearly shows you that there is a considerable amount of optimism in the equity markets in the United States. And of course, eventually profits will in fact pick up, not right away. S&P 500 profits probably won't go back to the profits we saw in 2019 until maybe 2022, but they're moving in the right direction, certainly over the next 12 months. And,
I see.
And that, I think, will give some positive breath to the market.
Mr. Hong, agree or not?
Yeah, well, I think the U.S. market very, very strong, very strong. I think there's no denial about it, because of the tremendous amount of liquidity that the Fed is pumping into the system. And also, the U.S. tech company is indeed, leading in many areas as well. So I think, there's quite a bit for the rest of the world to catch up to that kind of high-tech standard. I think besides that, though, one has to be sort of be mindful that the U.S., especially the NASDAQ composite, is trading at a very high valuation, right? So no one has ever seen this valuation before, unless you're back in March 2000. Now, one can argue that because of the Fed's liquidity operation, therefore, stocks can trade at a higher multiple. But, it remains to be seen, whether when you're entering into a very slow growth, earnings growth period, even though you have very good liquidity conditions, whether, that is enough to support such high valuation.
Okay, Hong Hao, Anthony Chan, what a pleasure talking to both of you. Be safe, and we hope we will still follow the money. Thank you so much. And that's all we have for today. If you'd like to see more, you can certainly search our program, World Insight. Check out our YouTube channel. Follow us on Twitter and Facebook. I'm Tian Wei. On behalf of the team, thanks for watching. Bye for now.